when it comes to being able to trade against the trend, I like the fact that you are basically highlighting that, you want to stick with the trend, right? Because generally that's what we're doing. And what I showcase on a weekly basis, monthly basis, and daily basis is essentially showing you how you can trust the particular trend that we're currently trading within. Because many people, I mean, I've seen it all over social media. Many people are like, oh, it's done going higher. But being in this camp and just being really diligent as an ICT trader, um, if you're able to pick up on some of his validation invalidation ideas, which those are things that we talk about on a regular basis, obviously, the three PD arrays, breaks and shifts in market structure, uh, different ways that we validate a particular idea. You could clearly see that this is a fair value gap, right? This is an order block, and this is a low. So that's three in a volume imbalance. But did we spend a lot of time there? Not really, right? All we did too was wick below,
Yeah.
and then we turned back around inside this higher time frame run. And then remember, I also, if you remember from the last 2 weeks, I also mentioned this candle in the midpoint, right? I also mentioned this fair value gap. Um, I wanted to see a fast reaction when we dug into this candle. Can you explain to me why?
Say that again. So I'm trying to find your mouse. I lost it.
So this candle right here.
Okay, what about it?
So are you familiar with the breaker pattern?
No, I was just about to say. Every time y'all bring up break or block, I don't understand that at all.
All right. Well, so the breaker is a fairly simple idea. I know you have the YouTube model, which is totally fine. But you're obviously gonna
Right.
it's obviously
Pick it
gonna
up.
very much benefit your skill set if you're able to at least at a minimum identify at a basic level what particular PD arrays are, like what they look like, and when they are in price. Like order blocks is just this down candle, right? So if it stayed now, since we got above it and closed above it, we should not break through the midpoint of that if we are going to continue to be bullish. But in the case of price taking out this high, what did it do there when it took out that high? Was it creating trade? Was it creating rebalancing or retrading to an imbalance while it was doing that?
Yes.
Yeah. Was it running for some form of a higher low as it was running above this high?
Yes.
And then what happened once it ran through that high?
It
What
consolidated.
did it consolidated, right? So it took out this liquidity, consolidated, but at the same time, obviously, it started doing one of those three questions again. Once we took out the highs, generally, if it's a higher time frame high like this, for example, when price does that, a lot of times it'll go from running out some form of a higher low, depending on what direction it's going. Obviously, in this case, it was taking out a high. But once it fulfills that idea, generally price is going to want to return back and give us a retracement of some kind. What would it be reaching for? Generally,
No
it's
liquidity.
it's obviously it's on the list of the liquidity, right? So there's a very small amount of options here, right?
Previous daily high.
So if it runs through the high here, right, you're in the right vicinity with that answer. But is it a high that it would reach back down for, or would it be a low?
Oh, so
Yeah, it'd be a low from most likely the last 3 days, right? Because especially if we're like right here, right? This is 1, 2, 3 days. So if price takes out a high, you want to anticipate that price is going to retrace in some form or fashion when it's a higher time frame. So if we're trending bullish, when things like that occur, we now go from price taking out some form of a high to now thinking, okay, what below price could we reach for? Which is there an order block fair value gap, or is there a previous day or previous week's low below us that we could reach for to then continue setting price up to go higher, which that's what it did here, right? It took out the higher time frame high, right? Two highs actually, and then it eventually reached into a daily fair value gap. But once it did that, once it took out this high, once it hit this fair value gap, because it's been so bullish, what happened? Price consolidated, and in the same time, it was reaching down for some form of a low and a fair value gap or an order block, or also a breaker, right? So it takes out highs, so external liquidity, right? It runs out highs on the higher time frame, and then it seeks internal liquidity that's taking some form of a high or a high in this case, to then move towards creating rebound, retrading to or rebalancing some form of an imbalance or attacking some form of a low. Does that make sense?
Yes.
So yeah, again, just to make it as clear as possible, when price takes out higher time frame levels like this, in this case, it's a high or multiple highs, and it's been very one-sided, it's not unreasonable for them to then consolidate or retrace entirely to some form of internal range liquidity, because that's what an order block inside of a range is. That's what a fair value gap inside of a range is, right? This is external liquidity raids. And then once it takes external, some form of a high or some type of, PD array, in this case, being the daily fair value gap, it's not unreasonable for us to then start thinking, okay, we want to see it go lower before it will continue to go inside the trend, and go higher in this case. Does that make sense?
No.
So what about that doesn't make sense?
Just the whole thing.
So do you understand kind of what I'm trying to get at, possibly? If not, it's okay.
Uh, I want to say like just where price is looking to go, like the bias.
So yeah, so what I'm trying to get at is, basically pointing out the subject of, when price takes out a higher time frame level, say a high like this, or it hits a higher time frame PD array like this, if it's been one-sided to get there, once it does that, takes out the high or hits a higher time frame PD array, and it's been one-sided, it's very likely that they're going to want to retrace into some form of a discount array like you see here before it's going to look to run. And then also in that same vein, if it takes out a higher time frame level like this, a lot of times it'll consolidate, but then also reach down for some form of a sell side liquidity pool or a discount array before it starts to take off like you see here. So
Okay.
what, it's kind of like the ebb and flow of how the market seeks one side of liquidity, which, could be internal or external, and then it then will seek the opposing side or consolidate at the same time before it will continue back in the direction of the overall range, right? Or the bias or narrative. Does that make sense?
Yes.
Okay. So it's a very important phenomenon because we're breaking down in the most simple form possible the ebb and flow of the market, how it seeks one form of liquidity to then seek another, right? Or how when it hits a higher time frame level and takes out a higher time frame pool of liquidity, what could it reasonably look to target after that takes place, right? And generally, because price doesn't move one-sided all the time, when it does hit some form of a higher time frame significant level like this high or this high, generally it's going to look to attack the opposing side of liquidity and go from one form of those three questions to another, right? In this case, it broke through some highs, which are external liquidity, to then consolidate and seek internal range liquidity before being permitted to go back inside the higher time frame, uh, narrative and bias. Does that make sense?
Yes.
So it's a very, very important topic we're trying to dissect in the most simple way possible, right? When you're able to identify what we just discussed, and you could see the higher time frame, when you're confused on that lower time frame, by default, you will revert back to this way of thinking. right? Because if you have clarity with what we're talking about here, you're able to then put yourself in position eventually to also take trades opposed to the higher time frame narrative. In this case, a retracement to seek previous lows and a discount before it ends up continuing higher. And like I mentioned, if you look here, this up candle that took out this swing high and then just completely smashed lower. Since we got above that, this pattern here is what's called a breaker, right? High that takes out some liquidity, low that takes out some liquidity, and then we quickly get back above the high here that took out this liquidity. And this up candle then turns into a bullish breaker. Aside from what we just talked about, uh, which is obviously a good way of thinking about things as well. But if you're able to merge these things and then get better at looking at different PD arrays aside from just the YouTube model, um, you're able to then make even more sense of what it is that we just discussed, right? Because I mean, either school of thought, if you would have thought, okay, well, it took out significant highs and now it's going to retrace, it's likely to take out some form of sell side, reach for some form of a discount. And as long as three PD arrays to the downside don't get violated aggressively, we could, we could still trust the fact that it's still bullish. Now, if this retraced and this low was to break with an imbalance like this, then that would have changed our sentiment. We would have probably seeked this, probably seeked these lows because these are daily lows. So those are liquidity, right? Just like these are, just like these highs are. And you can kind of see 1, 2, 3, 4, 5 equal highs with a small portion of this fair value gap still left open as well. So it's likely that that'll get filled. Plus, we have this order block here too, right? So if price pulls down into it, for us to continue to trust buy side is going to continue to be delivered. What are our three PD arrays now? Well, we have this bullish order block. We have this wick and the midpoint that we can use. We have previous day's low, which is Friday's low. Remember, Friday's low and Friday's high on Monday's trading, those generally are the most near-term liquidity. And you could just visually see that here, right? Because if this candle is going to go higher and reach for this fair value gap or go lower and reach for this low, it has to violate this candle's range, which I don't think it will do because it's a holiday today, right? But nonetheless, going into this new week, these are things you want to consider. And then as price is, again, moving one-sided, if it takes out a higher time frame level, it's reasonable to anticipate consolidation within that liquidity it just took on the higher time frame, as well as a possible anticipation for price to go against what was already being delivered. In this case, it was bullish. So it wasn't unreasonable, given the fact that we took out buy side, for price to want to hang around and drop and seek sell side, because that's where losers are at if price is going to continue going higher. So they will pull price down, take out the liquidity, pair up their buys at logical levels, in this case, fair value gap, volume imbalance, new week opening gaps, taking out the swing low, to then pair their buy orders and then start to seek buy side. Because again, nothing has changed in the narrative. Our PD arrays are still holding true to bullishness. Right? So does that stuff make sense?
Yes.
Yeah? Okay, good.
I was
Good.
I noticed when I be looking at the new opening gap for S&P, there's like a week or two like it didn't have an actual gap.
Yeah, I know. It happens.
Okay, I
All
just
you
make
do
sure.
with that in that case is just draw a line. Just draw a line where it shows on the 1 minute where
Yeah.
the price started, because that line will still be significant because it's Sunday's open price for the
Okay.
most part. And Sunday's open price, if we have a bullish or bearish power three, it's going to be obviously impactful, right?
Okay.
So
It's NFP week too.
what happened?
It's NFP week.
Yeah, it's NFP week. So what does that mean? It's NFP plus a holiday. Very, very low probability week. So what does that
Right.
mean? That means you lower your risk. You only take one trade a day if you have to, and you stop trading by Wednesday, New York session. In this
Oh,
case,
I
In
didn't
this
know that
case,
last part.
because there's a holiday today, yesterday is non-negotiable for us to not trade because it's a day before, the day of, and the day after, which will be tomorrow. When it comes to a holiday, those are all technically low probability conditions based on what ICT has taught about navigating holiday trading, right? Yes, you'll see some moves, but big money's on the sideline because they're enjoying their freedom, right? They're out of the market because they don't need a trade during a holiday. They take off and come back generally, after the holiday. And because there's a holiday today, because it's going to be a shortened session, it's going to stop probably around the open or maybe a little bit into the 6:30 time window. Because it's going to be a day that is shortened, uh, there's going to be holiday volume the next day. That's why the day before, in preparation of the holiday, the day of a holiday, which generally is a shorter day with low volatility, and then the day after, which brings holiday volatility. Generally, those 3 days around a holiday are days that you just consider not trading at all. So the only day you would be able to trade this week is Wednesday, but because NFP week is there, uh, we got to be very cautious on top of everything else. So this week, with all the things that we have to consider, uh, it's best to not even participate. And if you do participate, you have to drop it by half risk, and you have to take only one trade. There's no 2 or 3 trades on these weeks, because if you're wrong, you could be wrong for no reason. Everything could look perfect, but because the holidays and NFP weeks and all the other prohibited news event weeks, generally it's heavily manipulated because big money's not in the market. So it's not worth even trying to participate. Doesn't mean you don't study, because every single day you should be at least looking at a chart. For the last 4.5 years, I haven't taken a day off, right? Maybe 1 or 2 days I didn't look at the chart. But every single day I get up at 3, even if I'm not going to trade, and I just look at the chart, get a feel for what's going on, basically stay connected and plugged in to know what's happening. So if something occurs later, or when I do get on and choose to participate, I'm not scrambling around trying to figure out what the hell is happening. I already know, right? I already know where price is at, what it could possibly do, what other markets are saying about that one market I'm trying to trade. And then when days like this or weeks like this pass, I'm able to get right back in line with things because I'm still plugged in. Right. And it doesn't have to be for hours, right? You can just get on, look at the chart, come up with an opinion, journal that opinion, and then just study what it does. Right. And that could be your whole situation. But obviously there's things that you're still trying to master. So at first, obviously, we got to do a whole lot more work than um, another trader that already has the experience doing these things and understands what's happening in the market. Um, Eventually you can chill a little bit, but it's going to, regardless, still require you to be on the chart continuously. Why is that important? Because you need pattern recognition and muscle memory, and you want to stay plugged in so you can accurately watch what's going on and continue to learn and see the relationship between each candle, each mode of delivery, like we just mentioned, what price does when it takes out higher time frame levels. When does price retrace? If it does retrace, what does it reach for? Right? What news events occurred that pushed price into the level that it went into? What was happening during a consolidation? What was the bonds and yields doing at that time? What were the other assets doing that possibly led to this consolidation? Right? All these are all questions that you want to reflect on, especially on days that you're not trading, because there's no interest in taking a trade. So your full focus can be on, okay, let me understand the dynamics that are causing this price action, right? Intermarket relationship wise, and then sometimes even fundamental wise, right? So yeah. Um, so yeah, does it make sense what we talked about in terms of when price hits a higher time frame level? what is to be expected, what is reasonably to be expected.
Yes.
And just to reiterate before we move on, when price takes a higher time frame level, remember the three questions. If it takes out a higher time frame high or a higher or hits a higher time frame PD array, and price has been very one-sided, it's very reasonable, especially if a fractal high forms, just to add that in there, for price to want to then seek the opposing liquidity or PD arrays. Then, once it fulfills that in some capacity, we could then start to consider, okay, price is probably going to kick back in line, right? And yeah, so one more thing too, breakers, like I was mentioning earlier, breakers are literally just this pattern here. Price goes up, goes down, it gets right back above it after taking liquidity, right? Right above the high that started the move, in this case, that took sell side. It very much accelerated above this high, got above this high, returned back down, respected this candle, didn't even get to the midpoint, didn't even get to this fair value gap. And you can see the response from that showing the validity of this level, the reactive nature of this pattern, right? So I have a section for breakers. Same with all the other models that we employ here in our community. I'm going to actually add this as well. You measure out that whole candle is the breaker, right? But you measure down, you measure up to the midpoint for price to be valid, right? So the midpoint would be here.
You eyeball it. You put like a fib on there.
Yeah. You could do either way. Put a fib or do something like this. So this here would be a bullish breaker, right? And then for that to remain valid, it has to stay above the midpoint. It could reach all the way through it, fill in the whole breaker, but that's not what we want to see. We want to see a very reactive response, and that's what we saw here. Aligned with everything else that we just talked about. The higher time frame narrative hasn't been violated, right? Price dug lower after taking significant highs to then sweep out liquidity. Once we swept out liquidity and punched into the breaker, we see the fast response getting above this order block. So now it's a change in the state of delivery from bearish to bullish, right? All it did was retrace inside the higher time frame bullish narrative. But if we would have taken this low out, right, if it would have impulsed lower like this down candle here, then obviously that's when we start to think, okay, maybe we're going to fill in the whole breaker. Maybe we're going to fill in the whole fair value gap. Or we've just completely changed things, right? If it breaks through that, the downside targets would have been one of these. And then obviously, if it was fast like this, breaking through it, and then if we also added on the intermarket relationships, and if those agreed with downside indices, then obviously we would have been able to favor sell side. But because that didn't happen, we remain bullish and trusting the higher time frame narrative. Does that make sense?
Yes.
So what we're kind of covering here is what to expect when price takes out higher time frame levels and how you can go about potentially thinking through counter trend ideas that could then be, a lot of times pretty high probability, opposed to what the higher time frame direction is, right? When it hits a higher time frame PD array, when it takes out a high or hits a bearish order block, in this case, or runs out some form of equal highs or single highs or weekly highs or daily highs, and then gives us some slight response indicating that it's going to reach down to the opposing liquidity. That run to the opposing liquidity can be framed out as a counter trend idea based on the logic we just discussed. And obviously it's going to take time to get in line with, obviously. But that's also a tactic or a set of mindset that you can start to navigate a little bit easier, have more clarity, right? Does that stuff make sense?
Yes.
All right, good. So yeah, now when you're watching what takes place in price, hopefully you can start to think this way. Um, and yeah, it's part of price navigation. It's going to be in the uh, it's going to be in the series of videos, and obviously this is going to go in the mega folder.
I gotta add bonds and yields to my watch list.
Which one?
Bonds and yields. I don't have them.
Mm-hmm. Let me add this to the breaker section for an example.
Do I find the bond and yields names on bar chart?
You find them here in the let me see. You find them here. So these six are the ones that you need. Why is there six? Because SMT sometimes happens in the trio, and then sometimes that'll lead to giving you some important insights that you could then use to make even further sense of what could take place in the bonds and yields. And then obviously that heavily impacts what price ends up doing in the assets that are affected, that being the
Yes.
indices of the
Can you
DXY.
screenshot that? My dad phone updated.
I think I actually have it in the bonds and or the interest rate markets section. I think I have a screenshot of it. Uh, I'm pretty positive I do. If I'm not mistaken. Let me go check.
Yep. So they never change.
No, they don't. We use a continuous contract. I mean, you can use the you can use the actual month, the actual contracts for the uh asset. I just like the continuous chart because I mean it's continuous, less work, right? And we're not trading it, obviously. We're just looking for what the sentiment is, and then we
So
use that sentiment.
you don't mark it up, or
Oh
just
no,
put
we
it.
mark it up. We absolutely
Okay.
mark it up. We do this, the same exact analysis process because we're trying to figure out what that's going to do or what it could reach for based on our analysis, and then we take that and then we merge it with what we believe the indices are doing, what the DXY is possibly going to do, and it just gives you X-ray view. You know, the interest rate markets act as leading indicators. So, like for example, the DXY could be consolidating, but the yields are aggressively running higher, and the bonds could be smashing lower. That indicates that when DXY breaks out of a consolidation, if the yields are going higher and the bonds are going lower, then we can anticipate bullish DXY, and then that should in turn lead to bearish indices, and then vice versa. If the yields are going lower and the bonds are rallying aggressively higher, but the DXY is consolidating, then obviously if the yields are going higher, the DXY should eventually break higher out of the consolidation, and then that should send the indices lower, right? So it's all interconnected, and that's why it's the first thing that we focus on every time we get on trying to do some analysis for the start of the day, start of the week, um, and then even the start of the month. Because if we could get a higher time frame perspective on what the bonds and yields are doing at the start of like a new month, like we have right now, you can get a pretty solidified reason to trust a particular direction. And then if it's on that higher time frame, if it continues to press that higher time frame, uh, and you can read what it's doing on that time frame, then you have no reason to go against that relationship. Sometimes for weeks, right? There's always going to be consolidations in bullish trends. There's always going to be consolidations in bearish trends. That doesn't change anything unless actual things change, like three PD arrays getting broken to the buy side. For example, this area here, if this was to violate this high, that's a swing high violated, fair value gap, and then a bearish order block violated, and then a volume imbalance as well, and also a new week opening gap. So if this was above this high, this drop probably wouldn't have happened, right? Because it's 1, 2, 3, 4 PD arrays that should hold price and continue to press it lower, and it did, right?
Okay.
But you could see here too. Look, fair value gap, new week opening gap, order block, volume imbalance, swing high, right? Price got above all of that, and what's happening? It's continuing to go higher instead of trying to remain going lower. So you can just see the visual, hopefully fairly simple, showcasing that price changed from bearish to bullish, and you can validate that using the 3 PD array rule. Keep it as simple as possible. Does that make sense?
Yes.
Beautiful. Beautiful. And you can see SMT as well, that further amplified the fact that this was just a retracement to this breaker, right? To the fair value gap, to the sell side liquidity after taking buy side, right? And you could see the response continuing to go higher. Right. We do have pretty ugly bonds
Oh,
and yields.
I forgot to ask earlier. You said for new or NFPUs like only day we finish trades Wednesday. Why?
Yeah, your
Why is that?
maximum should be by Wednesday. You should be done.
What is this like?
Eventually, you'll be able to trade probably more,
I'm
but
about to say, what's the significance of Wednesday?
it's I'm not sure why Wednesday, but it's because we're getting too close to NFP. It's either a day before, a day of, or day after NFP. It's similarly treated like a holiday, right? Because it's anticipating, it's manipulating, it's prepping liquidity for them to violate people, and it's just best to be aware that that's coming, because that's what the news events are used for. They're used to manipulate, or that it's their excuse to go against anything that's happening and provide extreme manual intervention. And a lot of times it's hard to read because it defies logic that we utilize. And it's just best to, at least until you have all your stuff in place, at least until you have the processes that you employ that you trust, until you trust yourself with your analysis. Uh, until that is achieved, obviously you can, or you should consider just, uh, ending your trades by Wednesday, unless of course NFP is on Wednesday or FOMC is on a Wednesday, which sometimes happens. In that case, you would pretty much just not even trade past Tuesday, right? And that's because the manipulation is so heavy, and it's a lot of times going to go against any type of logic, or it's going to just be prepping liquidity to be violated. And if that's the case, like what is the point in getting in if the things that we study, if the things that we are trying to utilize for accuracy just won't be respected in terms of the logic? It's just best to just not even participate in that case, and just allow price to print and you know give us more insights, and just whipsaw people out, the ones that can't get off the chart, the ones that have to be trading even through any condition, right? Let them get violated. And then once they're violated, you come back in, you'll find some clear shots generally, right? Or it'll just consolidate and not do much until the week after NFP or one of those news events or a holiday, right? Sometimes that's the case too. You want to force yourself to realize that trading more is never going to equal more money. Trading more means more risk. And if you don't know fully, or if you don't fully have processes in place that protect you and provide clarity of opinion and accuracy, for the most part, it's very easy to get violated in these times, because smart money, for the most part, doesn't like they don't participate ahead of a news event, during or right after a news event. I mean, obviously there's going to be some that do, but generally it's after the response takes place. And there's processes and protocols to trading news events. But again, it's, until you have more experience and trust in your abilities, uh, that's a very high risk, high manipulation time. So, you know, it's like going into combat when you've never been into combat. You just get tossed in there because, you got to go. Like, it's not generally going to work out well, especially if you didn't have the proper training. You don't have the strategic advantage. You don't really know what the hell's going on. You're just running out there with a gun, similar to what we do if we are new trying to trade NFP. It's a freaking war zone. And people are deliberately getting violated by the entities that move the market. So, because that's the case, until we have things solidified and understand more about how to navigate those conditions, it's best to stay away from them. Study them, yes, but until you have certain things in alignment, it's best to just study it so you can get used to the conditions, right? And then obviously ICT's mentioned many rules to trading those prohibited news events, but you can not trade those news events on the list like ever in your career and still have a good career. It's only like a couple times a month, right? Versus the 25-ish days that we have to trade. And this isn't like, again, it's not like we have to be on the chart more to make more money. We have to find quality setups that allow us to have logical entries with logical risk that we could take advantage of. And when we have larger size, whether that's a 100K funded account, whether that's a large personal account, uh, the easier it is to then get in and be disciplined and know that you don't have to take trades every single day. If you have a $500 account, obviously, if we're trying to get rich soon or quit our job soon, and you only have a $500 account or a small account, it's hard to reason with this logic because you're like, well, I just need to trade more or have bigger size so I could blow this account up and make it bigger. That mindset is a trap because people that are trading large sums, they're not aiming for 20% a trade, 5 to 10% a trade. Some are, but for the most part, the ones that are consistent, like people like Warren Buffett, for example, he only makes anywhere from 17 to 22% a year for the last 50 years. Right. So if that's the case, I mean, success leaves clues, you know. So if that's the case, and we're still just learning, what is it that can make us reasonably think we're correct if we're thinking so crazy? Like, oh, I need to get 100 points every day, or I need to do this, I need to do that, or I need to trade more. Warren Buffett ain't in there just winging it on NFP.
Yeah, I want to get into stocks, but I'm trying to learn this first.
Yeah, definitely. Because I share some insights about that as well for long-term portfolio management and different things. So we can dive into that when the time's right.
But I mean, I
But
like, but I was just telling my homeboy, uh,
mhm,
about the community and stuff. And I was
yeah,
like, goddamn, yeah. I mean, I know him for like 2 years, but I was like, I've probably been serious for the past like 3, 4 months, and like, it's just the
mhm.
amount I learned in these 3, 4 months is like fucking crazy.
Hell yeah. Telling you, and mind you, that right there is a beautiful example of some of us unfortunately getting in our own way. Or of course life happens too, because you also have been through some things in the last year or so, right? But for the most part, generally it's some students are just not ready to learn, so they have to do it on their own. I know I wasn't. I know it took me almost a full year to be able to get out of my own way and you know, move my mindset away from the traditional thinking that's shoved down our throats every freaking day on social media. Get rich tomorrow, this and that. Like, it's easy pushing a button and blah blah, all that stuff. You know, Lamborghinis and shit like that. It just takes us some time to push that type of mindset away and actually accept the reality um, of what this requires. You know, but once you accept it, once you gain the wisdom that's needed, which you have done, which I'm really proud of you for doing, things start to change, and the puzzle starts to become a lot more clear. And then it starts getting more fun, even when you're not making money right away, because now you're
Right.
starting to make sense of things. So then when you do get to the point where you can take trades and you see money flashing, if you spend the time working on your mindset, um, and accept some of the truths, things become easier. And then you start having organized processes, and then it becomes more repeatable, and just that stride that you start to take, that starts to take hold after a while, it starts to compound. And then of course jumping on these types of calls, studying your own perspective, and then referring back to some of the things, like some of these videos, live calls or markups that we post in the community. You start to see slowly but surely your progress, and journaling, taking that serious, that provides motivation, because you have a log of where you were and then where you're currently at. And like you said, the last 3 months, you've taken some large strides. You focus on very specific things as you're supposed to. And those specific things end up coming together. It's just like uh, any other complex job that requires mastering other little things. Like a mechanic, you can't just know how to change tires and say you know about cars, right? You have to be able to do multiple things related to that car so you can fix multiple problems and be an efficient mechanic. Well, in trading, for you to be a technical savage, okay, it requires different elements. And those different elements eventually, when enough time is spent mastering them and applying them and organizing the process, it becomes a lot easier and a lot more reliable, which then obviously sparks up the flame even further, you know. Um, and then you start to believe more, you start to see things play out more. And every time that happens, you're building trust. Every time you take a loss and manage it gracefully and not beat yourself up, you're improving, even if you take a loss, because it's going to happen. Losing is going to happen. But again, it's just part of the growth process and development process. Uh, but I'm glad that you're finally at the level where now you're starting to realize certain things, and I'm glad that you've made some strides in the last 3 months.
Right. Like I was even telling him, and I don't feel like this is like the only way you can trade in the market. Like you got the
Yeah.
ICT where I feel
Oh
like
yeah, there's all
I
kinds of different
I was
ways.
because there's a because how he trades, but he can break it down to you, deep dive very fluently and tell you exactly what he's looking for, exactly what he doesn't want to see. And I was telling him, I
Yeah.
was like, uh, it don't matter how you trade. I was like, as long as your risk management and your psychology is A1, I was like,
Yep.
and you got a deep understanding like your own personal strategy. I was like, I don't think it really matter how you do
No, I mean
it.
there's evidence of that too when it comes to all these other traders that don't even trade ICT concepts, but they do well. They're very good at managing their risk, and because mind you, all the strategies are just things that are putting us in alignment with making a decision. You know,
That's his main problem, bro. Risk
that,
like
that's
half a percent
that's the
on like
thing.
one day.
Yeah, that's the thing though. ICT concepts, there is one truth that nobody can deny, at least those that have traded multiple different strategies and then that have come to ICT concepts. Uh, ICT concepts is so amazing because it gives you the why, the how, the when to trade, when not to trade, very logically, in a way that's very much repeatable, and it makes sense when it comes to liquidity, you know. But you can take that information, a lot of the information from ICT's concepts, and then go trade regular retail patterns, and then actually make it more efficient. Most of the time when people take trades, ICT's mentioned this, but when people take trades and they're doing these um, other types of strategies, like just normal retail patterns, generally when those retail patterns take place, underneath that strategy they're trying to make a decision off of, ICT concepts are at play. Order blocks, fair value gaps, running on liquidity, shifting market structure back to a fair value gap, right? All these different things are at play underneath the retail logic when it is correct. It's all in alignment when those things play out. It's a fascinating study, and it remains true every time, you know. So it just
That'll
breaks things down more detailed, you know what I mean, and allows you to have the trust versus the retail mindset, which is, oh, everything's 50-50, which it's not. Um, it's much, you can get it way more accurate than 50-50, you know.
right. Cause I see some people have like some low ass win rates, but they still are
Yeah,
profitable
yeah.
with like 30%
Yeah,
win rate.
Jade Cat, bro. Jade Cat, I think he said that his um accuracy rate fluctuates anywhere from 30 to 60%. And he's made $1 million right, trading, you know, but the thing is his risk to reward is high. So if you have a high risk to reward and you're able to learn how to navigate that, then you don't have to worry about like taking a bunch of trades. You don't have to worry about a low win rate because if your risk is proper and you're able to hold your trades and you understand the market, you don't have to be perfect at all. Like, you know, it's great to have high accuracy, but if you overtrade, over leverage, and you're just winging it for the most part, generally that uh, high accuracy won't really do much because the high accuracy may be there, but if you're getting out too early or you're not trusting your setups and you don't allow it to run, or you know make those types of mistakes, you may have high accuracy, but the losers outweigh your winners. So it kind of just puts you behind the eight ball. The perfect midpoint is obviously having decent accuracy, anywhere from 60 to 75%, but then also um, being able to, you know, navigate the markets properly. Um, so yeah, high accuracy, decent risk to reward, and proper risk management. You know that that's a recipe for success. And again, that allows you to not be perfect. It allows you to um, be repetitively effective as long as you stay organized and continuously work on controlling yourself, and then also getting better at reading where the market's going to go, which is pretty much what we do every day, every week, and it won't stop. Right? Doing those things allows you to have much more of an edge over everybody that trades retail. And again, underneath those retail concepts, if you understand ICT concepts, you see that ICT's concepts are the reason that those retail patterns play out properly when they do. Right. So, you know, people have the TikTok mentality these days. So they want one pattern that works every time with minimal time on the chart so they can go travel every day and trade from their cell phone. And
Yes,
it's
that's
just not
exactly
how
how I
this
was.
works.
I was like, oh
Just
yeah, I
not
can
how it
take
works.
MT4 with me. I could just be driving or on the beaches, top
Yeah,
of entry.
it was a good ploy to get us sucked in. I know that sucked me in.
Definitely.
Um, which I am grateful for that. But then again, there's too much of an emphasis on that to try to sell people things. And it's unfortunate because although this takes a lot of work, although it takes years to be a success, um, it doesn't matter. You know, it's well worth it. Uh, and unfortunately, if people's expectation, that's why in the course I'm building for you guys, uh, and basically what I mentioned continuously about trading plan development, it all starts with mindset and expectations. There's a reason for that. Because if you come in, it doesn't matter what model you have, if your mindset is screwed up and your expectations are ridiculous and you are not going to accept base hits, you always need home runs, right? If these things are out of alignment with reality, doesn't matter what you do, every model will fail. And it's unfortunate, you know. But that's why we focus on that so much here. If I didn't focus on that myself, nothing I do would work. I wouldn't be able to do this full time. I wouldn't be able to be where I'm at. I wouldn't be able to help other people and see them make results doing what's being shared. It just wouldn't happen. If I was out here taking 10 trades a day and promoting that idea, I mean, everybody would be getting obliterated. You know, that's what many of these traders do, like Mamba FX and all these freaking weirdos on the internet.
Somebody just
Um,
talked about him.
yeah, I literally bought his signal service just to observe what he does and see if he's actually accurate in any way. I think like 6 months ago. And this fool is so manipulative. Like he'll call out an opportunity, the trade will go completely against what he said, and then 20 minutes later he'll say, "Yeah, I got out here," but and then change the whole entry stop loss to make it look like he was able to do things. He lags out the edit, and then they fail, but he claims that he made money and then he posts it like he did something phenomenal. He did it like 15 times in a row one time in a day. I was like, bro, are you serious? People are buying this. He's selling signals like this, and people stick with him. Like it doesn't make any sense. It makes absolutely not a drop of sense. But it just shows people are easily manipulated in this industry. That's why I have my community. That's why I offer my time, because I'm not trying to allow for this industry to have no other resource. But of course, the ones that have the largest followings aside from ICT are generally the ones that get the most eyeballs, and then people unfortunately get sucked into those, and people that have smaller accounts or channels, they don't really get much attention because they're not popular. When in reality, the ones that have those small accounts, the ones that are not seeking so much attention, are the actual ones you should really be paying attention to. Because if anybody sits on the live calls we have and sits there for like a month or so, it's very clear to see, for the most part, we are in line with the market many, many, many times. And when there's a time when it's rough and not worth entering, we also know that as well, and that happens sometimes. But even in those conditions, we're still able to pull out logical entries, even when it consolidates, even when it's kind of stagnated, which has also been proven multiple times. You know, Mamba FX can't do that.